Vincenzo'S Gold Crypto Investing. This is the second video. We got interrupted by this scumbag, Hilty guy rep trying to see me on my lunch break. Video update here, bell notification, comment down below, like the channel and share for that truth, trust, education, and information that you come to expect and deserve from the channel and the institution and movement that started and was created, built, and expanding for you, the retail trader and investor. It's only $3.99 a month to help keep these videos coming out. Members of Jabroni Killers also price targets. We released our first on the 2025 and 2026 price targets on gold and silver mining stocks such as B2 Gold, First Majestic Silver, Fortuna Silver, gold bullion and silver bullion price targets. And we're going to release XRP, the XLM, the Shiba Inu, the Bitcoin, and the Ethereum this week. We'll go out the members only for what we're expecting for the remainder of 2025. But if we get into the last video, we took a look at Bitcoin and the XLM. We're going to look at the XRP. But first, it's very important, as you do know, the new way we're starting to do business is with the education. I feel I must educate and inform better on ways that we invest and the different ways that we invest and the importance of diversification and investing in different sectors and in different manners, the way your investments are. Meaning you could have real estate as one of your investments because it's going to act differently than, say, a 401k as a form of an investment. And you can see we have our 401k has just crossed, and it's been only a short 4.5 years of steady weekly out of my paycheck investing into my 401k, and we are currently sitting at, after 4 years, just over 4 years, 4.5 years, $100,237.84. Of that, about $14,000 of that is profit right now, right? We're up about 14% on our 401k, and the importance of that with the long-term investing is not only do you get your returns, but you get compounding interest on your returns, right? And that's very important, right? Because it helps the value of your money grow quicker. And a brief summary with a little brief education, and that's how we're going to do this: a touch of new knowledge and information that you may have and probably didn't have before that you're going to get now. And if you already did know it, it's help reinforcing it and hearing it again to help put more tools into your toolbook and to help spread out and diversify and understand the value of doing so to make you want to do it more. The value of long-term investing lies in the power of compounding returns, which means you earn returns not just on your original investment, but also on the gains that the investment has already made. Over time, the effect accelerates wealth building dramatically. Compounding growth. If you invest $10,000 with a 7% average annual return, after 10 years, you have $19,600. After 20 years, $38,700. After 30 years, $76,100. After 40 years, $150,000. And that's if you just invest $10,000 initially and never reinvest anything along the way. But when you do a 401k or you continuously invest in your long-term investment, that would grow over 40 years. If you started with 10,000 and say you put 500 a month in, that would be a couple $1,000,000 after 40 years, right? The longer you stay invested, the more your money earns money on itself. Reduce impact of market volatility. Market rise and fall in the short term over long time frames, 10 plus years. Market downturns smooth out and average returns tend to stabilize upward. Investors who stay the course typically recover from crashes and benefit from longer bull markets. Lower taxes and fees. Long-term capital gains on assets held 1+ year are taxed at a lower rate than short-term gains. Fewer taxes equal fewer transaction fees equals more money working for you. Time in the market, timing the market. Missing just a few of the best days in the market, like you've seen today and a couple of days ago in the mining sector, where some of these stocks were up 15, 16% in a day and 40% on the week, right? So you could have been in the market the whole year, but if you missed that week, you missed the whole year's return. due to trying to time entries, exits can drastically reduce your overall return. Staying invested consistently beats trying to predict tops and bottoms. Example, imagine investing $5,000 a year for 30 years in a stock fund averaging 8% returns annually. Total investing, $150,000. Portfolio value, $566,000. Earnings from compounding. The key to long-term consistent investing, $400,000. Bottom line, long-term investing is the most reliable path to wealth building. By staying invested, reinvesting earnings, and letting time do the heavy lifting, your money multiplies, not just grows. And that's very, very important. And that's a reason not only do we invest in cryptocurrencies, and we talk about the cryptocurrencies here, and not only do we invest in the gold and silver bullion, the mining sector, but we have the 401k, we have diversification, we have some money in money market because it's essentially cash earning 4% a year in interest. Not a lot, but it's a diversified, another area where my money is. And then real estate. I own a home that's paid off. So that is an investment. And there's another area where I have in the market where I have money working for me as the house is paid off, although the house does have cost and maintenance and fixing it up. But I do get the appreciation on the house, which will become a rental when I buy my new compound here over the next couple of years. So we have real estate that I have in my portfolio, crypto. We have the mining stocks. We have a 401k. We have precious metal bullion. And cash. We are well diversified in 5 sectors, in different sectors of the economy and investments, right? But if you look at the XRP price, and that's our little bit of education for this video at the beginning, and I feel like that's going to be good to talk about that more than just talking straight up about the price all the time. We'll talk about the price still in the video, but I believe the education is most important because you can't do anything without the education and knowledge and experience. You won't be able to manufacture things, and things will always seem to work the wrong way without education and information and knowledge and experience, right? But you can see this head and shoulders, I still believe we're in. We drew this pattern out right here in early to mid-January. Left shoulder, head, right shoulder. Identified a neckline at 209 support. Major upper resistance where you've hit once, twice, 3 times, and most recently back here in early to mid-May for a 4th time. That's your major upper resistance, right? And then your neckline's your major support at 209. And you can see that's the area that we've been trading in. These sides were, again, another great call on the first mover advantage and another reason to help support the retail, the video, the station and the person and the company and the movement that's looking out for the retail trader. We let you know when the price was up here with the first mover, we had a target of the 200-day moving average, right? At first, the neckline support, then the 200-day. Hit the neckline support first, then we came down to the 200-day. Hit that beautifully, and you can see the track in the background, how it's pretty much been in that range too. And that's another thing that added confidence to our overall forecast that we were predicting for the short to medium term, because we predicted this back here. So this wasn't here yet, right? This was the future that we were predicting, and then the future became the present, which then became the recent past in front of our very eyes here. And you can see the price did come down beautifully from the 341, and it wicked down all the way to the $1.61. And now that advice that we give you, better buying opportunities, don't buy after an 8x pump. That was already an extremely better buying opportunity if you never owned the coin and wanted to get into the market and didn't want to miss out by going on anywhere during the early November through early January. Unfortunately for the retail trader, if they hopped on XRP into YouTube, every facilitating channel that they would watch with the major influence that were criminally bought and paid for would have had your emotions FOMOing you in and tipping you over that tipping point, and you would have been forced to buy by your emotions being preyed on and played upon up here by those criminal influencers and infiltrators, right? And you would have been buying here and then immediately took a 45, 48, 50% to the negative and still being down 30, 35% from there and feeling the pain, right, as a first-time buyer, and then not understanding the market, But if you would have found this station, which you probably wouldn't have, we would have said better buying opportunity in the short term coming up, and bam, better buying opportunity all the way through here. If you would have bought here, would have been way better and already had its value than if you bought here, right? So that's what we're looking at there. We're sitting above the neckline support. We're threatening to have a bearish cross now, where you can see the 50 is about to get below the 100-day moving average after it just had a bullish cross just a short time ago back here with this most recent rally. And it looks like we're going to come back down to that neckline support, which you would probably officially touch the 200-day moving average now. And then that would be your decision time. If you slip below it and then start doing something like this, where it starts getting used as resistance, you're confirming a breakdown and confirming a major flip from a major support level to a major resistance level. And that's going to aid and assist more confidence and give more credibility that we're going to end up down here at the $1.29 technical target before we end up starting to bottom out mid to late 2025, and then going into 2026 we turn that bottom, and you can see all the tracks from 2026 into 2027 start the next leg of the bull market, right, into a massive run, the same way as we had the massive run up here recently after the long consolidation and the downturn from the last recent pump, right? But if this gets held at the 209 neckline support, obviously on your way back to the upside, your major upper resistance are the two moving averages there, and then your major upper resistance is the $2.55 that's sitting up there. Moving along, the AMP has tried to make a little bit of a move today, but you can see that 100-day moving average sitting there at 0.00454 has knocked it down quite easily, and then it sold quickly right back off. If you can get back above these two moving averages in the daily time frame and get back above the 200-day, you will shoot very quickly all the way back up to your next upper target at the 0.00603, which I still believe at some point this has to happen. Our track obviously is a little bit longer waiting to do this. It's actually waiting what I just described, waiting till mid to late summer 25, going into 2026, and rounds that bottom, and then starts the next leg of the bull market and tries to make a run up into that area that I thought we would hit at some point between the 0.25 and the 0.027. I still think eventually at some point in the future that will hit. So if you're buying in the future anywhere down here, you're going to have great rewards onto the upside if